Yo, what's good everybody? Welcome back to another video inside of section 7 of the course. We're going to be continuing our talks on, candlesticks and candlestick patterns. And in this video, we're going to be actually showing examples of candlestick patterns, what to look for, and then different entry techniques based off of certain patterns. So, what in the hell is a candlestick pattern? Now, based on the previous section, we know that candlesticks, all they are ways of measuring market data. And remember that candlesticks they're basically telling us a story of human emotion. And now we know that human emotion is the major cause of market movement. Now, understanding that, we can tie these candlesticks together, and candlesticks form certain patterns. Now, candlestick patterns, they're basically just used to give us entry signals and let us know when the ideal time is to enter. Think of candlestick patterns, just think of them as entry signals. And you're going to understand that, you're going to see different patterns easily than others. So there's going to be certain patterns that stick out to you that you see all the time, and it's very easy for you to determine when this pattern is present. And just understand that I might see a pattern very easily, and you might see that same pattern, but like just a lot less frequently, and it's hard for you to see that pattern. And vice versa, you might see a pattern that I just can't fucking see, and that happens, right? And the only way that these candlestick patterns are valid are when they're occurring at a level of support and resistance. Now, the more you study these patterns and the more you study charts, you're going to realize that these candlestick patterns, they play out all the time, right? They're all over the charts, but it only matters when it occurs at a level of support and resistance. And then also with that, you must let the candles close before determining what the pattern, candle strength, and candle type really is. So based on the last section, we determined, candle strength and, determining strong candles, weak candles, and neutral candles. Now, the only way you're going to know if it's strong, weak, or neutral is to let that candle close. Remember, prices are going to be fluctuating during that time increment. Over an hour of time, prices could potentially go up and form a high, back down for a low, and flip bearish, and then flip back bullish and close bullish. Like it's gonna fluctuate all the time, but the only time you can determine if that market pattern is valid or the candle strength is valid is when the candles close. That's very important that you wait for the candles to close. Don't get into a trade because you're assuming that candle is going to close bullish or whatever, right? You need to wait for that candle to actually close to enter trades. Now, we're going to dive right into some candlestick patterns. I'm going to show you two of my personal favorite patterns. This next one is my personal favorite. So we're going to be talking about engulfing patterns. We have bullish engulfing and bearish engulfing. Now, we're going to be talking about bullish engulfing first. So a bullish candle that closes above the open of the previous bearish candle. So all a bullish engulfing pattern is think about it like this. You have a bearish candle and then a bullish candle that engulfs it. This whole body eats the previous candle's body. It's very simple, right? It engulfs the candle. Very simple. And then obviously a bearish engulfing would be the exact opposite. So you're going to have a bullish candle and then the body gets engulfed by a bearish candle. Now, understand that there's going to be a better probability of success if the candle engulfs the wick too. So if the body engulfs the previous body and the wick. So this is going to be a very high probability setup, obviously if it occurs at a level of support. And then obviously over here, this body engulfed the entire candle's body plus the wick too. Okay, so then that is going to be a high probability setup. Now, diving into the next market pattern, it's kind of it is very similar, but it is a bullish variation and a bearish variation pattern. So in the bullish variation, you're going to have a bearish candle followed by two bullish candles, and then the second bull candle closes above the bear candle's open. So you're going to have a bear candle followed by two bullish candles. The second bullish candle is going to close above the bear candle's open. So the bearish candle opened here, followed by two bullish candles, closes above it. And then same way with the engulfing, you're going to have a better probability of success if this candle, the second candle, engulfs the wick of the bearish candle. So as you can see here, the body engulfed the wick of the bearish candle. Now obviously bearish variation, same shit, just flips. So now you're going to have a bullish candle followed by two bearish candles. Second bearish candle must engulf the bullish candle. And now all this is showing that prices rejecting these certain zones. So obviously you want the bullish variation to occur at a level of support, and you want the bearish variation to occur at a level of resistance, showing that, that is rejecting that area and it wants to go the other way. So understand that, like I've said multiple times, guys, I don't claim to be an expert. I don't claim to know everything about markets. There are literally hundreds of entry candles and candlestick patterns and different ways to take entries off of these. All I'm doing is showing you my favorites and the things that I like to do. Now, don't get me wrong, I'm sure that there are better ones out there or whatever, so do your own research and find out which one you see best, right? Because like I said at the beginning, you're going to see different patterns much easier than I will, and I'm going to see different patterns much easier than you will, and everybody's going to see markets just a little bit differently. And like I've said, my favorite patterns are engulfing candles. That's my bread and butter. That's my baby. If I see engulfing, give me that, right? So moving right on, now we're going to dive into entry techniques based off of these types of patterns. I'm going to show you two different ways of entry based on bullish engulfing patterns. Now there are two different entry methods, like I just said. There's aggressive entries and then there's conservative entries. So understand that one trade can generate multiple entry signals. Even looking at the exact same pattern, a bullish engulfing pattern, there's going to be multiple entry points in which you can take advantage of this opportunity, and you determine which entry is best for you based on your trading methodology, your own personality and your own risk tolerance. So in this example, based on my drawing here, I hope it makes sense. In this we have a bullish trend, right? We're making higher highs, higher lows. Price broke out for new highs, and then we have pulled back into this area of support and resistance. And then at this area, we see a bullish engulfing candle print. Now, obviously, I've drawn this. We have a pullback. The arrow is pointing over to this box. This box is what's going on at this level of support and resistance. The blue represents the line. Very simple, right? Okay, so using this example, there are two different entry techniques. There's the aggressive and there's conservative. The first one we're talking about is the aggressive entry. Now, the aggressive entry would be right after this bearish candle closes above support with a wick showing, rejection off this major support zone, and then closing weak, showing a loss of momentum, meaning, hey, I'm tired of going down, let's go up. Okay, and then obviously, it's a bullish trend. We're looking for bullish momentum. This is a sign of bullish momentum that sellers are, losing momentum and becoming weak. Now, this entry is obviously before the bullish engulfing prints, but it is placed in anticipation of the reversal. If you don't like taking, a bunch of losses, or if that kind of messes with your head, man, I lost again, I don't recommend doing aggressive entries. Just wait for a more conservative entry. Now, the benefits and the cons, we'll go over that later, but just know that there's an aggressive entry, which would be right now, as soon as this bearish candle closes, showing rejection of this level of support. Or you can wait for the more conservative entry. Now, the conservative entry is going to be entered after the bullish engulfing candle closes above the open of the bearish candle. Even better, obviously, if it closes above the high or the wick. And this is considered the safer approach. This is going to save you from fake outs and stuff like that, which we'll talk about a little bit later in the course. But just know that based on this one simple move, there's going to be multiple different entry methods, and I just broke down two of them. Now that you know the two different entry techniques, you might be thinking, hey, what are the pros? What are the cons? So I broke that down for you. So with the aggressive entry, the pros might be, a better entry price, obviously, because you're not waiting for that bullish candle to come in and move price away from my zone. So you're getting a better entry price. You're going to have a better risk to reward because your stop loss is going to be a little bit tighter. And then obviously, the cons are you have less confirmation and potentially more losses and fake outs. So understand that, if you are the type of person that just hates losing and you can't take that on your psychology, that's fine. That's how I was when I first started trading. Then you need to be more on the conservative entry side and stop taking aggressive entries. Just wait for more confirmation. So now with conservative entries, the pros are obviously you have more confirmation and you have a potentially higher win rate because you're going to avoid all these losses and fake outs. The cons are, you have a worse entry price, and understand that it's not completely fake out proof. So you're potentially, getting a worse entry and a worse, risk reward And there's still chances where, after that bullish engulfing prints, the price just continues to go down, against you. And just because you're taking a conservative entry doesn't mean you're not going to lose, right? We know that, in this industry, you're going to lose, right? So now what I'm going to do, I am going to go over to the charts, and then we're going to find some of these engulfing patterns and some of these variation patterns, and then just kind of show you guys how it plays out, showing you different entry techniques based on these candles. I'll see you guys over there. Alright, so now that we're over back on the charts, we're going to use these previous examples, analyzing the same exact chart that we did when we were talking about support and resistance. Now, remember, the white lines represent daily. I have dropped down to the 4-hour to look for entries, and we're just going to basically spot some of these candles. So as you can see right away, obviously we know that this is support because we had a rejection here. So then right here, what do you see? I see a bullish engulfing right at that level of support. Now, obviously, we know that this is a downtrend, so we probably would not have taken this trade, but just identifying these candles. And now, obviously, this right here is a bearish engulfing candle, okay, because this candle engulfed the previous, but it did not really occur at my level, so I probably would not have taken this trade because it's not, it's not all the way up at my level. This would have been maybe a potential for an entry, but we don't see my candlestick pattern. So we're going to keep moving, just moving. And then as you see, we get a pullback. What do you see right here? This is a grade A, perfect, beautiful, bearish engulfing candlestick. Why? Because as you guys see, it closed below the open of the previous, and it closed below the wick. So based on just this one entry, right, or this one overall move, there's going to be a couple different entries you can take. Now remember, like we said, we're in a downtrend. We are waiting for a price to pull back to this area of support and resistance, supply and demand, whatever you want to call it. And there's two different entries. Remember, the aggressive entry would be right here after this bullish candle closed, showing wick rejection on this zone with anticipation that price will roll over. Now remember, this is an aggressive entry, meaning this could go against you, okay? And then your stop loss, above support and resistance, targeting new lows, are the same lows, the next level, okay? Now obviously, see the risk reward, you're getting a 6-to-1 risk reward. If you wanted to have a little bit deeper of a stop, let's just say like right in here, a 4-to-1 risk reward, okay? But if you wait for the engulfing candle to close, now see how your risk reward changes like drastically. Now you're only getting like a 1.5 because the price moved so far away. So that's the negatives and that's the positives. In this instance, I really don't know if I waited for this engulfing candle, if I would have got into this, because it's just so far away from price already, and it's only a 1 to 5 or 1 to 1.5 risk to reward. Don't really like it, so I would have waited for another pullback. We did get that. You could say that this right here is a bearish engulfing candle because it engulfed the previous bullish candle. I don't really know if I would have taken this exact setup. I probably would have dropped down to a different time frame just because it's not the cleanest setup. But nonetheless, it is a bearish engulfing. Once again, targeting next level. Stops go above the previous level of resistance. Bing, bing, bing. That's an entry. And then obviously if you wanted the aggressive entry, you could have taken it straight up off that just immediate. Hell, you probably could have got in right here off of this small candle after it showed loss of momentum. There's an entry. Moving on. So those are a couple examples. I'm going to try to find a variation pattern for you guys. Oh, right here. Okay, so we have a level of support. Now, obviously, we wouldn't have taken this trade because it is a bearish trend, and this is a bullish move. So you have a bearish candle followed by two bullish candles, with the second candle closing above the open of the bearish candle. This right here is a bullish variation pattern. Could have taken that buy. Would I have? Probably not, because the overall trend is bearish. I don't trade against the trend. And then just look at this right here is this today? No, this was yesterday, okay? So we waited for price to break under. It got new lows, and then we're waiting for a pullback into the next level of support and resistance. We got that. As you can see here, the aggressive entry probably just wouldn't have happened because this candle closed so strong. But if you waited for the bearish engulfing, these would have been valid sells. From here, stops go above support and resistance, targeting next level. Okay? bearish engulfing candle. Why is it a bearish engulfing? Because it closed below the open of the previous and closed below the low, which gives it more of a high probabilistic outcome. Now, I'm going to shift over to this bullish structure and try to find some maybe bullish engulfing candles that we could have taken. I don't know if it's going to happen or not, but we're going to look. Nope, but we got a bullish variation. Okay, so right here, obviously back on this part, we know we're bullish structure. We know the daily's bullish, if we can remember back. And then obviously we have a bearish candle followed by 2 bullish candles, with the second bullish candle closing above the open of the bearish candle. So this would be a valid entry. Stops going below resistance, targeting next level. Okay, so on and so forth. There's an entry. We'll try to find a couple more here. Oh, here's a pretty cool example. Let me check the daily. Let me highlight this level real quick just to make sure this would have been valid. Where in the hell did it go? Okay, so this probably would have been nope, because we wouldn't have used that level of support and resistance. Never mind. Moving on. We wouldn't have known this was a level of support and resistance just because there's nothing previous to that, if that makes sense. If not, we'll explain that later. So dropping back down to the 4 hour, try to find a couple more setups here. And obviously, guys, remember, if you're having a tough time spotting these setups, you're only going to get better the more you practice. So, like I said, take your ass to www.tradingview.com, go to your charts, and just do what I'm doing right now. Just practice. That's the only way you're going to get better. So, right here, we know that price, would we have used that zone? Probably not. Never mind. We're not going to use that example because that's cheap. Cheap. Moving on, looking for more pullbacks. Okay, so I'm not finding any bullish setups that I probably would have taken. Now, obviously, you're going to see more of these candlestick patterns if you drop down, a couple time frames. You're going to see, more of these candlestick patterns. And also understand that, if you drop down time frames, you're going to get better entries, but you're also going to get faked out more. There's a higher probability of getting faked out more. So, like I said, I take 15-minute entries, but that's just me. If you wanted to drop down to the hourly, this is the exact same move we highlighted earlier. We broke below, waited for the pullback. This is a bearish engulfing candle right here. Okay, so was this one, but this one's actually really sexy because as you see, it closed below the open of the previous and the low. So this is a grade A, good example. Obviously targeting next level. Boom, that's a 3-to-1 risk reward. Absolutely beautiful. Now, did it play out? It took a while to play out, but yes, it did. Nonetheless, that's just the keys to, spotting entries and candlestick patterns. Guys, I hope you go on to TradingView on your own and actually practice seeing these different entry techniques. Now, remember, if you are having a tough time finding engulfing candles and variations, practice, okay? And if you spend more and more time at this and you just can't get it, and you find a different entry technique or a different entry pattern that you like, cool. Rock with that. Go for it. Okay. Now, obviously, we have learned how to, identify market structure, identify key levels of support and resistance. Now we are finding out, candlestick patterns and different entry techniques. Now, understand that there's just a few more things that need to be tied in to make this whole thing click. You can't just, you can't just be winging it, right? You got to get the whole thing in there. So, stay with this course. Just keep grinding it out. And then in the next section, we're going to start actually diving into price action and reading price action and getting better at determining price action, finding better entry techniques, and tying it all together. So with that being said, guys, go to TradingView, like I said, practice these entry techniques, and, you're only going to get better. So I'll see you guys in the next one. Peace.